I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 4th of February 2024. I'll be doing the weekly market review and I'll be covering also as schedule on the beginning of every month. I'm gonna be reviewing gold, oil, and Bitcoin on the higher time frame outlook. So starting with the DXY, here we have the weekly chart. As you can see, we are likely now regarding DXY and the forex market, it's just been in a mess. We have the buy side liquidity here, the relative equal highs, and just above these relative equal highs, we have this fair value gap between this candle's low and this candle's high. Price can trade up there and take out the buy stops and fill in this fair value gap before if it wants to trade lower to take out the sell side liquidity and the sell side liquidity. But we can expect some kind of higher prices attacking this buy side liquidity and reach into the fair value gap. Going to the daily time frame. Now, for the people who are wondering why we had this movement on Friday, because we had NFP, and we all know that before NFP, it is really important for you to not trade before it. But if you get any setups after the event, after 8:30 in the morning, you can participate in that setup. More of that info is mentioned in the live stream that I did last Friday. So you're more than welcome to check that out to get more insights regarding NFP. And on Wednesday, I also did a live stream regarding FOMC interest rate announcements. So you can check them both out and you get a lot of insights about those high impact news drivers and how I actually did expect how the market's going to be moving. So back to the charts. As you can see, expecting price to run up to the buy side liquidity here, and just above the buy side liquidity here we have this buy side liquidity and we have this fair value gap. Price can reach to this fair value gap and fill and engineer some liquidity from there. So that's going to be pretty much it for DXY. Going to ES, here we have the weekly time frame chart. This is a continuous contract, by the way. You can see that price is slowly reaching up to the all-time high, which is the buy side liquidity. Now if you compare that to the NQ, later on you will see that price has already swept that all-time high on NQ, but on ES it didn't reach to it yet. But we are seeing high prices that will be sending us or taking us to this all-time high. You can see that last week we traded lower, reaching to this fair value gap between this candle's high and this candle's low, and we've seen some support there, and it was also close to the buy side liquidity right there. So old highs are now, when broken, are turned into support, and you can see that here. Going to the daily time frame, you can see how price traded up higher, retracement to the weekly fair value gap, and you can see that there's a volume imbalance right there between this candle's close and this candle's opening. You can see that there's a volume imbalance. Price trades to it, took some orders, and then rallied up higher, took out the buy side liquidity. You can see that we had a bullish order block, the daily bullish order block. Price retraced to the bullish order block on Friday and then traded up higher, and then retraced. So I'm still looking for high prices on ES attacking the all-time high right there. So that's gonna be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see that if you compare NQ to ES, ES has taken the previous week's high, but NQ haven't reached to the previous day high yet. So I'm still expecting high prices. We never try to pick the top when we're in a buy program, and we never try to pick the bottom when we're in a sell program. We keep with the flow. If it's a buy program, we keep looking for buys. If it's a sell program, we keep looking for sells until we are proven otherwise, and we get a break of market structure that can potentially tells us and signals to us that we are looking for the opposite side of the marketplace. But until that is proven, we keep looking for buy signals in the buy program, that which is you see here in NQ. Whenever we are in a buy program and we are in a buy program, you just look for buys until we reach to the high time frame objectives, which is the all-time high right there. We reach to the all-time high. Now you should a bit slow down on these assets NQ and DAO, because on both NQ and DAO we have reached to the high time frame objectives, and switch to the ES, because you can see on ES we haven't reached to the all-time high, which is the buy side liquidity objective. So you can trade ES in the meantime, because we can see some kind of consolidation or retracement at the meantime on NQ, because it has already reached to the objectives. But that doesn't mean that we have to pick the top because it did so. We just keep with the flow until we're proven otherwise. So that's, you can see also when price retraced on last week, it has reached and filled the half of the fair value gap, which this is the weekly fair value gap between this candle's high and this candle's low. It reached to the consequent encroachment of that fair value gap, which is a busy buy side imbalance, sell side inefficiency. It is inefficient with the sell side. So it reached to the consequent encroachment of that busy or a fair value gap, and it reached to the high of this fair value gap, which is from the past. You can reach and you can look at the previous weekly reviews. I've mentioned about that fair value gap. Price retraced to it, treated it as inverted fair value gap, and then retraced up higher, traded up higher, but it failed to take the previous week's high. So you can see here on the daily time frame, I'm looking for the previous week's high to be attacked or targeted next week. So, and also you can see that we've formed a bullish order block here, so price can accumulate orders, accumulate longs at this bullish order block and offset them above this buy side liquidity and above there. So that's gonna be pretty much it for NQ. I'm still looking for higher prices. Going to Dow, here I'm viewing the weekly time frame chart, and I'm also viewing the continuous contract to get more data of the past. As you can see, we have swept the all-time high last week, and now we just keep pressing higher, which means never try to pick the top. Even if your high time frame objective is met, don't try to pick the top. So I'm still looking for higher prices. We're not looking for lower prices unless we're proven otherwise and we see a break of market structure. So you can see the price is sending price higher, it's setting higher. You can see that the all-time high is now, it has been treated as support after we broke and closed above it. You can see the bodies are respecting the all-time high and considering it and treating it as support. You can see the bodies and trading up higher. You can see also there we have the bullish order block, which has traded to the bullish breaker, and that sends price higher. So we're still looking for higher prices on Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. Now, regarding the forex market, Euro USD and Pound USD, when they're coupled with the DXY, I cannot give a clear reading on Euro USD and Pound USD. In general, in the forex market, the majors which are coupled with the DXY, I cannot give a clear reading on what the market is trying to do, because pretty much it is not showing me the kind of environment that is high probable for me to be in that market. So actually, if you go to your USD chart and you go to the monthly time frame chart, you can see that we have been in consolidation the past year. So unless we break out of that consolidation, we can see some movement in one direction. Now, some people may consider like this would be a one direction move. Yeah, sure it is, but when you look at the high time frame, it is not a one direction move. It's been trading inside the range. So price can trade down lower, take out this low, reach to the monthly fair value gap. This is the monthly fair value gap. If you go to your charts, the monthly time frame chart, you can see that there is a monthly fair value gap. Price can retrace to that monthly fair value gap before it trades up higher and take out the buy side liquidity. So we can see price trade down lower, take out the sell stops, reach the bullish order block, trade into the monthly fair value gap, and then from there trade up higher to the buy side liquidity. Or it can, from there, it can just trade up higher. So that's what I'm talking, that's what I'm saying, is that on the forex market, I cannot give a clear direction of what price is trying to do. Going to the daily time frame, you can see I'm still expecting price to take out the sell stops here or reach the rejection block, and can trade to the monthly fair value gap, fill some of that fair value gap before it trades up higher to the buy side liquidity. So that's going to be pretty much it for Euro USD, or also known as the fiber. Going to pound USD, also known as the cable. Here I'm giving you the weekly time frame chart. You can see that pretty much price has been in consolidation the last 2 months basically. We have monthly fair value gap. You can go to your monthly chart and you can check it out. We have a monthly fair value gap. Price can retrace to that monthly fair value gap and to the bullish order block here. Accumulate some orders, engineer some liquidity and some interest in the marketplace that we're going short, and then run up higher to the buy side liquidity here and the buy side liquidity here. But this type of liquidity here, the buy stops that are residing here, I don't like this. I want to see price attack this buy side liquidity at least before trading down lower, at least. So going to the daily time frame, I mean, look at this. The past 2 months, like, is this the condition that you want to be trading in? I don't believe so. We've been in a consolidation, just in a range bound consolidation the past 2 months. And I don't believe this is the best conditions for you to be in it. So in this type of conditions, it's better for you to, if you're really insisting on trading Forex market, just switch to the exotics, the Forex pairs that are not coupled with the DXY in their pair. So for example, Euro Yen, Euro Pound, you can trade those Forex pairs because they're not coupled with the DXY. So you'll see a lot of movements in those pairs when compared to the actual majors that you're trading. Because trust me, this is not the conditions and the environment that you want to be trading in. Regardless, price and also in these kind of environments, if you, as I've mentioned, if you insist on trading the Forex market, just pick the exotics and trade the exotics, or else just head to indices. You can see on ES, as I've mentioned at the beginning of this weekly review, ES has some potential to go to higher prices because it has some objectives, it has some unfinished business up there. So it has probability for it to trade up higher. It's not in a range bound consolidation, rather it's in a buy program, so we can expect some higher prices on ES. But when you're looking at pound USD or the euro USD or even DXY, it's not giving you a clear direction of on what it is trying to reach to. So right now, if you even measure from this high to this low, we're pretty much at equilibrium. So price has the probability of going up higher as much as it has the probability to go down lower to attack this sell side liquidity. So it's really infant to you to try to pick a side in this type of condition or in this kind of environment. I mean, yeah, sure, you can hit and trade some kind of models inside these types of consolidations. You will try to pick one trade and just be very nimble with these trades. I mean, sure, you can do that, but if you want the highest probability trades, you have to, first of all, price needs to leave the consolidation, and once it leaves this consolidation, you have the highest probability trades that you will ever be in. So that's gonna be pretty much it for pound USD. I cannot give a clear direction or clear move or direction that I want to see price moving towards because we're in a consolidation and we're at equilibrium. So price has the probability of going up higher as much it has the probability to go down lower. So I'm not gonna pick a side until price or the markets here, the pound USD, Euro USD, or also even the DXY gives me signals of where it's trying to move to first, or what is trying to move to in terms of objectives. I can I can be involved in that market, but unless we do that, I'm not gonna be participating in that market whatsoever. So that's gonna be pretty much it for pound USD. Going to gold. Now I'm viewing the weekly time frame chart. I have reviewed this one a month ago, and I mentioned I'm looking for lower prices after we hit the projection block. I mentioned the last line of defense would be the consequence of that premium wick. So you can see that we've been driving price lower. We had a retracement here, roughly to the rejection block of this candle right there, and retracement down lower. So I'm still looking for lower prices after we swept the all-time high. We have relative equal lows right there. Price can reach the sell side liquidity. Now my main target is this sell side liquidity, which is the low hanging fruit, and then this sell side liquidity. Because if you would measure from this low to this high, the dealing range, you would be targeting the first low or the first PD array just below equilibrium, and it would be roughly this and this sell side liquidity. So you could be targeting these at the first low hanging fruit objectives, and you would be taking some profits there. The next would be this fair value gap, and the last, which is the external range liquidity below these lows. Going to the daily time frame, you can see how price swept buy side liquidity, the relative equal highs. It has swept those buy side liquidity, and now I'm expecting it to drop down lower to take out the sell side liquidity. Once it takes out the sell side liquidity, it would be forming, or it had formed, the bearish breaker. We have high, low, higher high right there. It has swept the relative equal highs, and then lower low. So these two consecutive down close candles are going to be the bearish breaker. Price would retrace potentially to the bearish breaker and then just melt down lower, jump down lower to the sell side liquidity. This sell side liquidity, you have this fair value gap between this candle's high and this candle's low. It's an area of taking profit right there, and then put eventually the external range liquidity down there. So that's going to be pretty much it for gold. I'm still looking for lower prices. Going to crude oil, I'm viewing the continuous contract, and I'm also viewing the weekly time frame chart. You can see that last weekly review, which is a month ago, regarding oil, I've mentioned that I want to see price takes out the buy side liquidity, and the buy side liquidity, the relative equal highs here, and reach the fair value gap between this candle's low and this candle's high. We've attacked this buy side liquidity, and then we had a retracement. We were very close from this relative equal highs, but we had a retracement here on last week NFP, and we traded lower, took out the previous week's low. Now, going to the daily time frame, you can see how price retraced to the bullish breaker. Now, it has some potential to go up higher, attack the buy side liquidity. But you can see pretty much we've been in consolidation. Even here on crude oil, between this high and this low, price has just been trading in that range. So we'll see. I'm still favoring higher prices, although we have some relative equal lows that are resting down there. Price can reach to them, but we can expect some higher prices. So that's gonna be pretty much it for crude oil. Going to Bitcoin. Now this is the monthly chart, and I like to keep Bitcoin on the monthly chart because we're gonna be seeing some clean moves on the monthly chart when compared to the weekly or even the daily time frame. Because this is not really the market that is really, let's say, regulated as much as the other markets, such as the gold or the commodities in general, the forex and the indices. Now, what you see here in Bitcoin here, it is this is not really the move that's going to be happening, but this is a clear depiction of what I'm expecting in the next few months. Now, last weekly review, I mentioned that I want to see price attack this buy side liquidity, and we in fact seen price attack the buy side liquidity right there and reach the fair value gap. So we've seen price attack the buy side liquidity and the fair value gap, as I've mentioned a month ago. If you would go and check it out, it's the first weekly review in January. You can check it out. I've mentioned that I want to see price attack the buy side liquidity right there and reach the fair value gap, and we've seen that right there. And from there, I can potentially see price trades down lower to at least these relative equal lows right there. And at these relative equal lows, depends how we trade from there. It's either gonna be bottoming there, or we can see even lower prices attacking this low, and we have the external range liquidity, which is this low. So I think that's gonna be pretty much it for Bitcoin. Since I've mentioned that I'm looking for higher prices, price can actually have one more peak above the buy side liquidity to fill in this fair value gap, and it might just leave it there because we had a really aggressive retracement there, and we have formed let's say a doji candle. Now, retail traders are gonna be looking at this as a doji candle, and where it's like a decision indecisive candle where price is going to be trading down lower from there. But this doesn't mean that. I'm looking at the premium weight confirmation, and I'm looking at it closely on the daily time frame and the weekly time frame to see if price wants to show any resistance towards that level. If we get any resistance towards that level, we might see lower prices attacking these relative equal lows. So that's gonna be pretty much it for this weekly review. I hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.